The economy may be adding jobs overall, but there is one sector that has been shedding them. As we've been reporting, companies in the energy business have been scaling back, letting go of rig workers as well as engineers. This as oil prices tumble. Today, the pain continued as crude lost another 1% to settle at $44.66 a barrel. As Morgan Brennan reports, the job losses in the energy sector may be far from over.
173,473. That's how many energy-related jobs around the world have been or are in the process of being lost since oil prices began their plunge last fall. Energy consultancy Graves & Company, which has been tracking layoff announcements, says a third of that total has come just in the past 3 months, and that announcements have been coming in waves.
There was a fairly significant wave of service and supply company announcements in late January, February, and early March. We saw additional waves in April with additional announcements by Halliburton and Baker Hughes. And then here recently, just towards the end of July, I think ahead of the earnings announcements, we began to see additional announcements, particularly by E&P companies.
Among the oil and gas producers recently slashing jobs is Chevron, which announced a 1,500-person reduction last week, and Royal Dutch Shell, which disclosed its own additional cuts of 6,500 positions. But no industry has felt the brunt of low energy prices more than oilfield services companies. More than half of the losses to date have been in this sector, including Baker Hughes and Halliburton, which, ahead of their proposed merger, have cut a combined 27,000 positions, double initial estimates. The pain's rippling out to service and support industries as well, with more than 23,000 jobs lost, including at law firms, trucking fleets, and steel factories that manufacture products for drilling. Even railroads have been downsizing as commodity volumes of crude, coal, and metal fall. And it may only get worse.
I think we're likely to see lower levels of prices for a considerable period of time. And there are going to be more layoffs. This will get worse before it gets better.
Graves also maintains his estimates may be low, since some companies are furloughing staff and others are finding ways to simply terminate workers. What we do know is that U.S. employment in the mining sector, which includes oil and gas, has tumbled by 71,000 since December, according to the Labor Department. And tomorrow, when we get the July non-farm payroll report, it's widely expected the sector will log another month of declines. For a Nightly Business Report, I'm Morgan Brennan.